Hi all. We are in the midst of another market correction when we have seen such corrections every few years, while at the same time we also know the bounce backs have been much stronger than the such corrections. So the key is to stay invested in the long-term horizons. But at the same time, we also understand there's certain concerns and some news around particularly around the valuations and the future prospects of small and mid-cap investments. And we thought of addressing this through this video, while we have shared a detailed note to our clients already. So now let's start with first understanding the definition of this market cap segments. We have large caps, mid cap, and small caps, and it's pretty straightforward. The top 100 listed companies are large caps. From 100 to 250 is mid cap, and from 250 to 500 are the small caps. And although there are many more, close to 3,000 companies listed in India, but we're looking at this top 500 stocks to define across three market segments. But if you understand and if you look at how markets have rallied in India, these small and mid caps are no more actually small and mid caps, right? To qualify for a small cap category, the market cap has to be around close to 10,000 crores. A typical mid cap company can have a market cap of anything in excess of 30,000 crores. And a large cap company in India as of now is anything above 80 to 90,000 crores. So even though they are named as small and mid cap, they are actually grown to sizes of 10, 20, 30, 50,000 crores. And we have seen many of the small and mid caps by market leading growth has become large caps now. Certain names which come to my mind are Bajaj Finance, the Eicher Motors of the world. Now let's look at the key characteristics and behavior of these stocks, right, in these segments. So if you talk about large caps, they are basically give more stability, they have a lower volatility, they give returns which are a little more consistent, and they have a lot of institutional interest in them. Whereas mid cap, they are somewhere a balance of returns as well as risk. They have a stronger growth potential. We can find many sectoral disruptors in them, and so that's where mid cap stand. And talk about the small cap, they are high risk, high reward stocks. So obviously, they are also have a lower liquidity, but you can really find those multi-bagger potential in these small cap segments. So ideally for the aggressive long-term investors, small cap allocations are equally important. And if you look at the last 10-year returns of these stocks in these categories, you can see the difference there. The large caps are given on 12 to 15% over a period of 10 years. Your mid caps are given 18 to 22%, whereas small cap given higher 22 to 30% returns as of December last year. Now let's try to address the question around why should we invest or stay invested in small and mid cap despite such higher valuations and big corrections in recent past. So number one is the high risk, high reward. We understand small and mid caps, they have a higher volatility and they correct more. But at the same time, they have a higher correlation to the growth of the economy. And we've seen in the Indian economy, which is expected to do very well, one of the fastest growing economy in the world over the next 5-10 years. So to really benefit from this growth and generate a lot of alpha, allocation to small mid caps is very important. And if the investors can really manage the short-term corrections and volatility, and the long-term rewards can be great. Second is the market cycle outperformance. We have seen in the past corrections during COVID, or if you talk about the 2008 crisis, although the small cap, they corrected big time, 40-50%. But when the market started bouncing back, the returns were multi-bagger. So the wealth was really generated in these stocks. Then third is diversification benefits, right? So it's very important part of the portfolio. I mean, to have a right diversification. Now, including small and mid cap stocks in the portfolio really adds a lot of diversity, and where a lot of market segments can be added, where large caps are more concentrated in certain market segments. And at different economic conditions and timings, different sectors tend to perform in a different way. So that's why small and mid cap adds that flavor to the portfolio. Then is fourth, which is most important, is structural growth of India, right? If you really believe that the government and our economy is gonna grow in the next 5-10 years, and we've seen a recent budget also, which is quite growth oriented, I think it's very important to participate in this growth story of small and mid caps, because the initiatives like Make in India, the PLI schemes and infrastructure spending, these growth opportunities are more in mid and small segments. So just to align and benefit from the structural growth, it's very important to have small cap allocations in the portfolio. Hence, after analyzing the whole the historical data, our view is that small and mid caps are essential in the portfolio. It is evident that despite the higher valuations, small and mid caps are give you much higher wealth creation in the long term, and they've outperformed large caps. And remember, these market downturns are also opportunities to find the right quality stocks in portfolio and build that. And it's important to remember that golden rule that find value in chaos, stick to your strategy, stick to the time horizons and the process to let the portfolio grow and create wealth. I hope you found this video interesting. Thank you.